It's always best to smartly invest your money rather than just sitting on it. And the smartest way to invest your hard-earned bucks is in stocks. Here are 5 top undervalued stocks you should buy now in 2021. Realty income. One might expect that the hottest companies this year must all be futuristic tech-enabled companies. But brick-and-mortar retail isn't going anywhere anytime soon. And this company, Realty Income, with a market value of $27.3 billion and a dividend yield of 4%, is a testament to that. Realty Income Corporation was founded in 1969 by husband and wife duo William E. Clark and Evelyn J. Clark. It first acquired a Taco Bell restaurant at the beginning of 1970. The company would purchase land for stores that needed the real estate for their operations, and then lease that land to the stores for the long term. And eventually, in 1994, it went public with an IPO in the stock market. And to argue for the continuing necessity of such companies, one just has to recognize that Amazon won't deliver haircuts to you, nor give dental services, and it also won't replace anytime soon businesses such as pharmacies and convenience stores and gas station stores where you can immediately grab a quick bite. Thus, the argument to buy stock in a company like Realty Income gains strength, which is called a triple net real estate investment trust, meaning that in its business model, tenants pay all the bills, including taxes, and the landlord just covers the rent. Realty Income has holdings of over 6,700 properties across all 50 states, as well as Puerto Rico and the UK. And it has 630 distinct tenants that are spread across 58 different industries. Its top 5 tenants include 7-Eleven, Walgreens, Dollar General, FedEx, and British supermarket chain Sainsbury's. These alone account for just over 22% of the portfolio. As far as dividends go, this company is known for paying monthly dividends instead of quarterly ones. And so far, it has made 612 consecutive monthly dividends and raised the dividend for 95 consecutive quarters. So if you want an investment to pay your weekly bills or cover your rent or the gym membership fee, then this investment is a very suitable and lucrative one that you should pay attention to. LyondellBasell Industries. While specialty chemicals may not be the most exotic industry, it sure is important enough given that the next company on this list, with a market value of $32.4 billion and yielding dividends of 4.5%, is LyondellBasell Industries, which specializes in this very market. A Dutch-domiciled multinational chemical company, LyondellBasell Industries was incorporated in the Netherlands, but has British and American roots, and has established operation headquarters in Houston, Texas, and also owns offices in London in the United Kingdom. It is the largest licensor of polyethylene and polypropylene technologies, as well as maintains productions of ethylene, propylene, polyolefins, and oxyfuels. The name has its origins in the December 2007 acquisition of Lyondell Chemical Company by Basel Polyolefins for $12.7 billion. And as of recent records, Lyondell held the 3rd place in the largest independent chemical manufacturers in the USA. And the nature of this company, which makes it very boring on the surface, makes for reliable and industrial operations that will attract value investors who don't fall for catchy headline stocks. LyondellBasell Industries works on dry plastics, petrochemicals, and refinement in a time where environmental friendliness is given priority. But cyclical industries like Lyondell are still doing well, especially with the economy post-pandemic rolling back on its feet. Driven by industrial and consumer demand, low inventories, and customer order backlogs, the strong momentum of the past couple of quarters should continue for the rest of this year and into 2022, says Jefferies analyst Lawrence Alexander. He continues by saying, given the strength in the leading indicators, we expect petrochemicals prices to remain strong through at least 2022. Trading at a price-to-earnings ratio of only 8 and yields as high as 4.5% in dividends makes for a very attractive stock. And while the stock value has been soaring since its recent bottom in March of last year, it also remains just a little above pre-pandemic levels. Therefore, Lyondell is very much worth consideration in your investment options. an inexpensive stock in a lucrative market. Amazon. The world-renowned brand Amazon is no surprise to see on this list of the most lucrative stocks to buy this year. If anything, Amazon chief Jeff Bezos' massive wealth increments alone can be a testament to how well the company is doing. Founded in 1994 from Bezos' garage in Bellevue, Washington on the 5th of July, it was originally a marketplace for books. But then it expanded to sell everything from electronics, software, video games, apparel, furniture, food, jewels, toys. In short, virtually every kind of consumer product. Today, it is not just an e-commerce giant, but also a giant in cloud computing, digital streaming, AI, and has taken a spot in the big 5 US IT companies. At a market value of $1.7 trillion, it is one of the few companies, such as Zoom Video, which went from an unknown enterprise video tool to a daily use tool for both corporate and everyday users, that have benefited from the lockdown situation. With strict prohibitions on going out, Amazon fulfilled consumers' needs, providing them virtually anything they could imagine within 24 hours at their doorstep. With the pandemic now heading towards its containment, more Americans are going out and going to the malls and shops. But that hasn't reversed the massive behavior change the pandemic caused for people to buy online, and that trend is likely to remain in place, if not continue. It is said that Amazon might see less revenue growth than it did during the pandemic, but it will still be at a healthy level and not fall below the levels of the last couple of years, meaning that it will likely surpass pre-pandemic levels and continue its upward trajectory, as well as increments in its profits, as well as given its revenues are increasing rapidly in comparison to its expenses. And Amazon Web Services, Fulfillment by Amazon, and the ad service will continue to see growth in margins, and Prime memberships will drive retail's revenue further up. All in all, it's easy to say that Amazon is one of the best stocks to invest in, not just now, but in years to come. Enterprise Products Partners LP. Another company that should be high on your priority list for investment options is Enterprise Products Partners LP, with a market value of $48.6 billion, which is an American midstream natural gas and crude oil pipeline company headquartered in Houston in the U.S. state of Texas. It was ranked number 105 in the Fortune 500 list of 2018. Its majority owner was Dan Duncan until 2010, a Texas-based billionaire. While it's true that the past decade has been seen by many as a lost decade for the midstream energy sector, such as this very company, which is often considered the blue chip of the master limited partnership space, trading today at levels of the end of 2011. But before making any conclusions off of that, it's also worth noting that while the stock price may not have moved much, the underlying business has been expanding along with its cash distributions. For example, 10 years ago, Enterprise used to pay 30 cents per quarter in distributions, and today it's up by 50% at 45 cents. And at current prices, this leads to an incredible yield of 8%. Argos Research Analysis Bill Selesky, who rates the EPD stock at buy, has this to say: Enterprise Products Partners should continue to benefit from higher volume as the economy recovers. He continues saying, EPD also has a strong balance sheet with below industry average leverage and a well-regarded management team. On valuation, EPD appears attractive based on historical PE and our discounted cash flow analysis. He also makes note of Enterprise's 22-year streak of distribution hikes. Having come a long way, midstream stocks like Enterprise are not attractive in their valuations, and their shares have been surging. And with the cooperation of the economy, Enterprise could be one of the best stocks, not just for 2021, but also the time to come. NVIDIA. Well-known and respected American multinational semiconductor company based in Santa Clara, California, NVIDIA specializes in designing graphics processing units for gaming as well as professional markets, and also system-on-chip units for mobile computers and the automotive markets too. NVIDIA has been an unsuspecting beneficiary of the cryptocurrency craze as of recent years. while its main base has been gamers for their high performance and reliable graphics cards, it's being noticed that NVIDIA products are useful for more than just video games. Bitcoin and other cryptocurrency miners have made NVIDIA chips their go-to products for their computation-heavy mining tasks. But that's not all that explains NVIDIA's rising fortunes. With the rapid advancement of AI, self-driving cars, medical research, and data centers, in short, every major computing initiative of recent years has seen NVIDIA chips being used and demanded even more. And so without surprise, the stock price has seen a nice surge, going from a split-adjusted $32.66 per share at the start of 2019 to topping $200 today. CFRA analyst Angelo Zeno says that the 4-for-1 split that will be effective in mid-July could help support NVDA's case to be added to the price-weighted Dow 30 index. Adding further, Zeno says, looking ahead, we think NVDA remains poised to see improving momentum within its data center business, 20% plus growth through FY25, with demand aided by an acceleration in enterprise orders in the second half of the calendar year. So, if you're someone who wants to make the most of this growth in the computer hardware industry, NVIDIA is a very lucrative stock to invest in that you can buy and hold for years upon years. And with that, it wraps up this video. Thank you for watching.